good afternoon, everyone. Thank you for joining us again in today's session of Beyond Connections, where our clients, or basically everyone tuning in today, can ask their questions regarding the current updates or current events that is happening in the market today. So I am Rainier Yu, and I am joined by my fellow analysts.
Beth Santiago, one of the analysts for Abaca Securities at MyTrade PH, covering banks, the economy, and telcos and indices. And
I am Isaiah. I cover some of the technicals for the MyTrade from Facebook.
Okay, thank you guys again for joining us in today's special session. Since it's been a pretty good market in the past weeks, especially since we've last seen each other. A lot of developments, not only here locally, but also in particular with the Fed. Okay, best you can take it away. With the Fed.
the Fed cut their policy rates by 50 basis points last week. This was more aggressive than what was initially expected by the market, which led to, I guess, the rally that we're seeing now in for the Philippines at least. Although there might be some concerns that that aggressiveness is stemming from fears that the U.S. economy is not as strong as we might like, and that rate cut from the Fed would pave the way or give the BSP some flexibility for their own rate cuts ahead. In the last two meetings for the year, the monetary board will have, and incidentally, the BSP governor was quoted in the news yesterday. That contrary to his previous comments of just one more move for the rest of the year, he's now signaling that the monetary board could cut rates in the next meeting in October and then again in December. So that would bring the total. If that happens, of course, Governor Malona is just one member of the monetary board, although arguably the most important member as the governor. If that happens, that would bring the total rate cuts by the BSP to 75 basis points for the year. And this would make equities more attractive and would further fuel, hopefully, the rally that we have been seeing in the past few days. I see anything interesting on your side?
Well, as far as the index is concerned, maybe those who haven't been really watching the market, maybe the market is back. The index is back up to 7,460, which has been a resistance since 2021 and 2022. So it's slightly stretched, and hopefully any pullback would appear to be a buying opportunity. Ayun. So we've been range bound for such a long time. It's a little bit stretched, but hopefully the next pullback will be support levels.
So I see. Do you think that if the market breaks out of that range, it would be more positive, or it will be more inclined for a steeper decline or a steeper pullback?
I think if it breaks through, I believe that many will take profits. Hopefully it pulls back one more time to let more people, those who missed the initial rally, hopefully can accumulate more shares at the bottom, making it more sturdy.
Okay. Okay, thank you for that, IC. And while we wait for some of the questions, and since IC mentioned some of the names rallying, I guess in terms of the industries or the sectors, what sector are you looking at, given that we are looking for another set of rate cuts in the coming months before we end 2024, before we wrap things up?
Looking forward to Christmas.
Yeah.
Well, in the past few days, we have seen banks being quite strong. Um, although, though you mentioned the rate cuts by the Fed and the possibility of more rate cuts in the next couple of months, the strength of the banks this week is more due to the kind of surprise RRR cut, or reserve requirement ratio cut, that was announced at the end of last week. This is much earlier than we had expected, and the move was quite soon, almost right after the governor signaled that they would be cutting the RRR this year. So aside from that, the cut was also substantial, bringing the reserve requirement down to 7% from 9.5% previously. So this would release a lot of liquidity and would benefit banks in the short term at least. This would normally you can expect that this added liquidity would spur loan growth, since they no longer have to keep this amount of their deposits as reserves for the BSP. But we are seeing still some weakness in the demand for loans. Um, so it might not actually be channeled into that entirely. We expect the banks to, at least in the near to medium term, park the additional liquidity uh, in, well, in other interest income assets, not necessarily loans. And this would benefit them because if they were previously years parked as reserves in the BSP, they would not be earning anything. So this would add to their interest earnings and would delay the compression in the margins that we were expecting from the interest rate cut. So this is near-term positive for the banks. Hence, you saw that strength this past week. But we do maintain that apart from the rate cuts, this additional liquidity would result in lower overall interest rates and yields, and would eventually result in lower interest earnings for the banking sector over the medium to long term. So this this strength that we may see not just this week, but possibly over the next couple of months as the BSP continues to cut rates. Um, we would also see interest expenses for the bank come down, so that this would actually boost their earnings for about a quarter or two. Um, but this we would see this as an opportunity to lighten up on those that are holding backs. But there's no rush, since we may see further strength in the near term. I think we're seeing some questions already in the chat box. Thank you for those that are uh, sending in their questions. So first, from Jack, which JA or Jack, which of the PSEI names that have already moved are due for a correction? I think.
Yeah, interesting question.
So after scanning for some of the stocks, these stocks are above the 70 level on the RSI to be AC. AC testing the upper end of the channel in the declining, the client declining channel here. So you may want to, if you have it, you may want to lock in some gains. Other names, crude gold is also slightly, a little bit on the overbought side, with an RSI of 73. Could still go higher, but next resistance would be closer to about 32, 33 pesos now. So those are some of the few names that have an RSI greater than 70, which would be loosely indicated as an overbought condition.
Okay, hope you got all of that, John. Thank you for the question. The next, sir, from Chris Miko Tolosa, update on Bloom and Wilcon. So I guess for Bloom, it has seen some declines over the past few days, and not really much news driving Bloom to decline despite the recent run-up of the market. So it could be disappointing, especially if you're holding Bloom and seeing the market going haywire. And a lot of the disappointment is still coming from its Q2 numbers. But just to keep it short, Q2 we expect it to be the bottom for the company, and moving forward, it should benefit from Southern North ramping up, and as well as some recovery on the Soler Entertainment City. Although for both, we don't expect a lot of recovery from its VIP segment, which has been weak over the past quarters, as seen as well in its peers. And what we are anticipating for Bloom, or what we are waiting for, in case it could be an indicator to buy, is if Pagcor would release their GGR numbers for the third quarter. And probably they'll release maybe in the next couple of weeks. And right now we still like Bloom, but probably somewhere closer to 8 pesos or below. So I think currently it is still trading above that. So further weakness, we probably would be buyers at that point. Then for Wilcon, and along with the other consumer names, not many have seen the same rally, or the same momentum as the other index names. So the likes of Wilcon, Emperador, they haven't moved much despite the index moving a lot. And for Wilcon, that's really more of really weak earnings over the past year or so, and not significant, or not a big recovery is expected for the rest of the year. So it's more of, I guess, the market in general is leaning towards to more, uh, leaning to more liquid or higher weighted names, and it would be uh, basically they're more sensitive to their earnings growth that is quite negative for Wilcon at this point. Okay, I think we can move on to the next question. So,
Or maybe you want to look at Bloom and Wilcott on
oh, okay,
technical
sure.
like
Okay, I see. Maybe we can take a look at Blue.
So Bloom tested support at this uptrend line here back in August. Has now re has now tested this neckline of a very small reverse head and shoulder, probably due to test the next resistance level at about 936. Wilcon, just quickly load it. Wilcon has been in a downtrend for a while in this descending channel. It looks like it's trying to form a bit of a reverse head and shoulder here. If it can break above this 18 pesos 70 cents, could probably finally reverse the long-term downtrend. This oscillator would probably need to get above 98, 98.60 to complete the reversal. Bigger pattern would be a larger double bottom here then. So hopefully,
Okay, thank you for that. I see you on Zoom and welcome. The next, I think this one is still for you. I see technical analysis for plus leads. See, it's really strong today.
that's wrong. Just- Um, yeah, so Plus found support near the anchored VWAP at 17 pesos 90 cents. Recently broke above the anchored VWAP that started at the August high. So if you just extrapolate the recent trend, it looks like it can hit about, well, at the very least, can test the resistance at 24. and eventually possibly go as high as 30 pesos on the channel. So,
Okay. Thank you, I see. The next, Best, I think this one is for you from Ga again. How long again will the reserve, uh,
Right, reserve rate, reserve, required reserve ratio, cut the rate, the margin compression, thank you, Rainier. There, actually, the RR cut will take effect on October 25. So we will see the bulk of the impact on margins coming from interest in higher interest income if they park it in treasuries or bonds. Probably in the first by the first quarter of next year. Um, so apart from that, the interest rate cuts that we are expecting or that's been signaled by the BSP in October and December would impact interest expense for the banks also in the first quarter. Um, and if there are more rate cuts in 2025, this would be this would impact the interest rate expense um, whenever they are implemented. So this prolongs the margin compression that we are expecting. Normally, the impact on interest expenses from lower interest rates lasts for about just one quarter, but with the additional interest income from the RR cut, this could add at least another quarter to delayed margin compression. So we are looking at lower margins for the bank starting at the earliest second half of next year. It's okay to be late, Abby de la Cruz, as long as you're here.
roll call.
You can rewind the video after the live anyway. So next question from Carl Tua. RC rate and RCR still a buy with the recent rally. Actually, this is also one of the beneficiaries of not just the rate cuts but the RR cut as well. Since the dividend yield of the REITs would stay relatively stable compared to the interest from bonds, since the dividends of the REITs are dependent on their rental income and not on the interest rate as bonds yields are, on which the bond yields depend. So we are still a buy for series and RCR. These are two of our three preferred REITs. If you are a client and you're receiving our navigator, you will see our target prices for these. Although for Series, I think we have to update our target price early, and we'll probably do that over the next few weeks. Just give us some time to do that. But yes, we are bullish on the REITs, and not just the REITs, but also on some of the developers, which benefit from would actually be more of a long-term beneficiary from the lower rate cuts and lower lower RRR.
So, yeah, just to add on that, since you mentioned two of the names here on the REITs, but I think they're quite different kasi. So, for RCR, basically its sponsor is RLC, which is more of a property stock. So, basically, they get these income from the offices, the malls, and some of the residential buildings. So basically, that is the sponsor for RCR, while for Citicorp or CREIT, sorry, their sponsor is Citicorp, which is a renewable energy. So basically, CREIT provides or leases its land to solar farms, so that's where they earn their income. So really, uh, kind of a different industry, but still more of property, but there is diversity still there, since Citicorp really is focused more on solar farms, while for Robinsons, it's more focused on more the more the relatively more known real estate companies or categories such as residential, malls, and such. So it's okay to have both, in our opinion. But if you would only prefer one as an asset class for REITs, then it couldn't go wrong actually. But RCR, as of now, would have the higher yield. But over the long run, I think C-REIT would also be at par with our RCR. Okay, next question from Mon Lawas Embolo. SGB, any update of the stock? Well, first, I think we can take a look at the technicals for SGB. Since over the past, I think months, there haven't been any updates on SGB. Just some rumors actually that we have been hearing with regards to possibly the Harlika Fund potentially investing in SGB. But apart from that, we haven't really heard anything since its last earnings as well. Not really anything significant from that. But in terms of its dividend yield, we are still looking into that, whether it will be sustainable or if it will improve moving forward, but there are no indications yet. So continue to prefer the other names as of now until we see more clarity on SGB.
So as far as the technicals, naman, it just recently broke out of the trend line. Um, some of the momentum is turning around, but as Rainier said, not sure if it has legs to keep going. So,
Okay, thanks, IC. Hope you're able to provide some insights on that. Sir Mon, thank you. And moving on to, well, our Suke, Mr. LB De La Cruz, napagbenta na ba ang lahat? Thoughts on SEC as the government plans to sell their stake. However, there will be an upcoming dividend this October. So, there are two parts on this. Since first, SEC, I think it reacted to the news that the government is planning to sell their stake, about 145 million shares of SEC, though we don't know how many do they have. So I'm not sure if they're entirely gonna sell their stake or are they're gonna pass it to one GFI to another. But I think we would be updated, or we would be closely monitoring the developments on this. We approach management, but we haven't heard anything yet. So I think the market reacted, but it was quite brief, and potentially this is because of the upcoming dividend this October. So last year, I think they announced October 10, so that's about in 2 weeks' time. So the market could be anticipating another large payout, similar to what we've seen over the past 6 to 8 quarters. So that may be the reason why SEC maintains to be strong, or basically consolidating, or trading sideways over the past days, despite the news on the government planning to sell their stake. So now we again prefer to, if you are looking to initiate a position, maybe in the next few days, if it drops maybe close to 31, 32, it might be a good time to sell, especially with the dividend coming up. But after that, it would be wiser to wait until after its X date, if it when it drops to probably 28 or even below. And just to be, just a caveat, since we have that news of the government planning to sell their stake, and especially especially when they announce the valuation for this, or how much they would sell it for, the stock will be susceptible to a possible pullback or even gap up depending on the price. Okay, I think we can move on to the next question. So from Olga Lobaton, is OGP okay to add for dividend investing? Okay, for OGP kasi it just recently IPO'd this year and they've only had one dividend payout in the second quarter, and that was for about 40 to 50 days after listing. So a lot of not really not much history yet on their capability to be able to provide dividends on a more consistent manner, especially with how gold prices, of course, are trending. But yun nga, with the gold prices nearing all-time highs or even at all-time highs, it could prompt OGP to provide more than they forecasted, because it would in turn lead to higher income for OGP, especially for their production. Although we've had some concerns whether they would be able to hit their targets in terms of production. Uh, it's likely to be offset by the recent run up in gold prices. So there are catalysts in the near term for OGP that it would be outperforming some of the indications or even or guidance provided by management. But on a longer term or a medium to longer term, it might be too early to tell if it's okay for dividend investing, especially since you are looking at dividend investing. We're assuming you're more of low to mid risk. You have a low to mid risk appetite, so maybe it's better to look at a uh, more stable or much more known name when it comes to dividend investing. So OGP again, just to keep it short again, maybe something to look at later. Okay, next question from LB De La Cruz. Is it the best time to accumulate holding stocks? So AC, GT Cap, and SM. Oh, okay. I think three of these names have really climbed up. IC, maybe we can take a
AC
look.
we discussed previously, it was about the channel division, so AC is
Yeah.
kind of, light then. GP cap naman, just search for it. GT cap also trading at the resistance, so you have the option to lighten as well, 730. Next one, I'm from SM. Just like this here. SM. So SM also trading at resistance, so it's very similar to the index. You can also opt to lighten here if you wish and try to buy back lower. That's it.
Yeah, so although if you were to choose among the three names, since IC was able to answer the question on accumulation, but if you were to choose on the three names, I think SM would be uh, okay. Maybe best later can share, but for me, SM would be the best choice among the three, or the better choice among the three, since SM it has the biggest weight, and especially with the rate cuts coming up, it would be one of the first movers, especially given its weight, and foreign funds will be looking at the index as a whole and likely to put more into SM. And it has ano naman, done well in terms of earnings, outperforming estimates or bouncing back pretty quickly in the second quarter. So a lot of drivers for SM to outperform in the coming quarters or even months on top of the rate cuts. And probably the added volume that we might see with those cuts. So,
Mhm. Yes, actually, we are bullish on all three of these, except maybe AC. We are more of a trading buy on AC. Um, Mostly since the recent rally has propped up the share prices of its major subsidiaries. However, the non-listed businesses under AC are still in its startup or growth phase. Not growth phase, but more of startup phase where earnings they are not contributing in a big way yet to earnings. So you're only a trading by an AC. Um, However, the in terms of valuation, the cheapest among these, I believe, is GT Cap in terms of PE. So we are positive on that as well. Um, Although this is not mentioned in our previous comments on the interest rate cut, GT will actually benefit since one of its subsidiaries, Toyota Motors Philippines, could see more sales as interest rates fall and the financing for cars would be more affordable. Um, Sales also for Toyota are still strong. It's still dominating the local market, even with the entrance of more Chinese brands. Uh, Toyota's managed to defend its market share. Um, we are expecting margins to improve also going forward with the peso, even if it doesn't necessarily strengthen that much, as long as it does not depreciate too much, we may see some margin improvement for Toyota as well. And then also its other earnings driver, which is Central Bank. Um, as previously mentioned, the next in the near term earnings for banks would be quite positive because of the lower interest expenses and the RR cut. So that would also redound positively to GT Cap. So those are the main reasons why we are still positive on the stock. Lately, only that I think the earnings number for the second quarter came as a bit of a disappointment, but this was only due to non-recurring items, um, mostly resulting in an unfavorable comparable over last year. So yun for those three. I think we have time for just one more question. It's already 4 p.m. I want to. Pwede ko ba
it's
sagot?
up to you.
Sige, chika lang kayong dalawa dyan in the chat box. Emma, are we in the bull market? Probably
Okay.
the best time to buy if the next index hits.
The index hits
We're already
71%.
past that level. Are we in the bull market, Ivy?
You know what I'm gonna say? I'm always in the bull market.
We already hit the year-end target. Our target for the year-end target for the index actually, which was 7.2, and we have upgraded this. And if uh, you are a client of MyTrade, this was recently mentioned in our short takes report. We will be updating our navigator on Monday for this as well.
Do we have key data coming ahead, right? Like inflation coming up, inflation range coming up next week?
The inflation forecast range by the BSP for September, and then the actual number from the PSA on Friday next week. So
Something to anticipate as well, and the market is likely to move depending on that. So I think that wraps things up for today.
so uh, that's all we have time for, folks. Don't forget to hit the like button, subscribe to our YouTube channel, and if you're not yet a client of MyTrade, sign up and you can have access to not just our live sessions every second and fourth Thursday of the month. We also have other events. Yesterday we just had um, we just featured CIREC.
Serious.
In our What Investors Need to Know live event. We will have more of that kind of events for you going forward, and also our outlook for the for 2025 coming up in maybe in December, hopefully, or in January. And also you'll have access to not just our fundamental reports but also our technical reports, not just from IC, but also from our other technical analysts, who all comes up with a weekly report on the big market cap stocks. Um, so this has been Beth, and
Rainier and
Isaiah.
join us again for our next Beyond Connection session in 2 weeks' time, I think. Thank you for spending your
Thank you.
afternoon with us. Bye.
thank you, everyone.